The Bitcoin price is looking like a coiled snake, bouncing just under all-time highs. Is a breakout imminent? After 16 days of net inflows, Bitcoin spot ETFs take in almost $1 billion of inflows yesterday, marking the second highest day ever. We hear from one CEO who says a much bigger wave of institutional capital is on its way. Plus, the market turns bullish as the first G7 central bank cuts rates. We look at how Bitcoin's price has behaved historically as the money printer turns on and how it's reacted leading up to elections. Will we see the $1.4 billion in shorts liquidated and all-time highs this week? We look at lots of charts and hear from some leading experts who say that this may be your last chance to get on the rocket ship before it takes off. You're not going to want to miss it. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. After 16 straight days of net inflows, Bitcoin spot ETFs erupted yesterday, taking in $887 million worth of inflows for the second highest day ever. Fidelity led the way with $379 million, BlackRock came in second with $274 million, and ARK came in third with $139 million. Bitcoiners were happier than millennials, seeing Whoopi Goldberg and the original cast from Sister Act coming on to sing Happy Day online today.
Oh, happy day. Oh, happy day. Yeah.
Bitcoin ETF haters like Jim Bianco continue to be in disbelief. These products are not failures in any measure. They're historically good. Take a look at this chart. IBIT, BlackRock's product, took just 137 days to get to $20 billion in assets. The next closest product, JEPI, took 985 days to accomplish the same goal. This is probably nothing, but IBIT represents 26% of BlackRock's inflows this year. BlackRock is only the largest asset manager in the world. FBTC represents 56% of Fidelity's inflows. They just happen to be the largest brokerage in the United States. Probably nothing. Which is why Franklin Templeton CEO Jenny Johnson says that we are just at the beginning of institutional adoption and a new wave is sure to come to these products.
Let's talk about spot Bitcoin ETFs. We're 5 months in. You guys have roughly $420 million in assets under management collectively across all the spot ETFs. We're looking at around $58 billion in AUM. How are you feeling about things, nearly halfway through the year?
No, I mean, on the spot Bitcoin ETF, we're feeling really good about it, actually. We are the lowest provider in the market, and, I think we've been happy with the growth.
And so what's next? Are you looking to capture more market share or optimize for the clients?
100%. We're hoping that people will be fee sensitive and we'll capture more market share. And as people become more interested in the space, you have a lot of firms that are a little bit in a wait and see mode. So you haven't even gotten that second wave. Like, this is really the first wave of the early adopters. And I think the next wave is the much bigger institutions who get more comfortable with kind of how it's settled out.
Speaking of beginning, is it actually happening? Are the money printers turning on? Just today, Canada's central bank, the first G7 central bank to do so, announced that it was cutting rates 25 basis points to 4.75%. And Bitcoin's price has responded accordingly, rising to over $71K per coin and coming up on its all-time high of $73,800 per coin. And not to forget our Canadian brothers and sisters, pretty close to 100K Canadian as well. As we mentioned earlier in this year, this was the first cycle where Bitcoin hit an all-time high before the halving. And we likely wouldn't even be at these prices today had it not been for these ETF launches and the massive historical adoption that they've had. And even saying that, you still have to note that we're up 11% since the halving, which is more than Epoch 2, which we were only up 10% at the same point, according to James from CryptoSlate. Looking at the charts of Bitcoin's price overlaid on each other, Bitcoin's price action looks really similar to the price action it has in previous halvings. Take a look at this pink line from this chart from Rational Root, and you can see exactly why people are calling for 100K Bitcoin in the next few months. People like one of our favorites, Dr. Jeff Ross from Vailshire Capital,
I don't think it's a coincidence that we see the beginning of the huge bull markets happen right around election time. And I think that's going to hold again this time. So my guess is if we were talking, what is it, May 8th? So 6 months from now, say it's November 8th, that's right around, the election happened by then. Whoever won, to Joe's point, lots of money spending is going to happen. There's going to be, zeal in the air. People are going to be feeling optimistic. That will start pumping. I think that's when we start talking about Bitcoin heading much higher. To go back to your chart you showed earlier, Preston, about global M2, we're going to start tracking along, at least at a minimum, tracking along that bottom line and heading higher. The economies are going to be starting to generate at that point. People will feel optimistic. I think that's the start of the bull market. And I love looking at past cycles and just kind of thinking about them. It's uncanny how similar this cycle is right now to the 2016 cycle. I think the ETF hype got people a little too hyped, and so we have this period of cooling that I think is going to disappoint a lot of people for the next several months. But then it's laying the groundwork for the next bull move higher. And to Hoddle's point, it's always a great time to be buying. I put a tweet out a day or two ago saying what stage of the Bitcoin cycle are we in, and I showed astronauts boarding a rocket. That's where we are right now. This is your last chance, and I'm telling people this is your chance to get on before the rocket takes off, because the rocket, I believe, is going to take off again, and I believe we're going to have another parabolic move higher, and I might be wrong, but I will be very surprised if 1 year from today, May of 2025, we're not well above $100,000 per Bitcoin, and I think we'll be moving much higher at that point.
One thing that I do appreciate about Dr. Jeff Ross is that he isn't afraid to put his price predictions and thoughts out there online and look back over time to say whether he was actually right or whether he was wrong. But he's been pretty spot on, and it's because he backs up his predictions with analysis like this. He keeps things pretty simple. He's had a long-standing thesis that Bitcoin is the ultimate absorber of liquidity globally. And so he looks at a lot of charts like this one that show that Bitcoin has been the greatest absorber of liquidity and been the best performer when you look at how much the M2 supply increase has impacted other asset classes. You can see that treasuries have gotten murdered, down 81%. You can see that gold has actually not fared that well as global M2 supply has increased over the last 10 years. Stocks have performed fairly well, up over 30%, but none of them have improved or protected your money as well as Bitcoin. And when you dive even a little deeper and you compare Bitcoin's performance versus that of the other positive performing one who absorbed liquidity, stocks, you see that Bitcoin outperformed the S&P 500 and QQQ by a wide margin. Over the last 10 years, when looking at the increase in price relative to the M2 increase in supply, the QQQ is up over 200%, and the S&P 500 up just 51%. But Bitcoin is up over 8,000%. This puts calls like Bitcoin to 150K from Tom Lee of Fundstrat on CNBC yesterday into perspective. You can see exactly why, in an era of an upcoming election, money printing, and the Fed potentially needing to cut rates, of why Bitcoin's price might increase dramatically from here.
The other lead I didn't want to bury, and this is another crazy call, Tom. 150,000 on Bitcoin by the end of the year. It's already June.
Yes. We're still constructive on Bitcoin. There's the tailwinds that are associated with the halving that just took place. We also know because of the Bitcoin ETF, and there have been tremendous inflows, but institutional sort of adoption and infrastructure being built around Bitcoin is only beginning. And that makes crypto, especially Bitcoin, a bona fide asset class. And I think that sort of widening ownership is going to be propelling Bitcoin to 150,000. And again, maybe surprising or not surprising, Bitcoin still follows math. More than 87% of the move in Bitcoin still follows just the number of wallets and the activity per wallet, and both are moving higher.
The market is still expecting 2 rate cuts this year. And so if the market has reacted like this to Canada's bank cutting rates, what will happen when the United States Fed cuts its rates? We don't make our own price predictions on this show. We just provide education, a little bit of entertainment, and great analysis on what's happening in Bitcoin. But I do want to ask 2 questions. After seeing what we've seen today and over the last several weeks, Do you really want to be on the sideline with Bitcoin right now? And question number 2, do you want to be one of the $1.4 billion worth of shorts that are set to be liquidated if Bitcoin hits a price of $74,300 per coin? I wouldn't want to be. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.